All right, welcome to a very unusual episode of OK Computer Podcast. I'm Dan Nathan. I'm joined by Guy Adami. Guy, how are you?
How are you? How are you? How are you? It is a fascinating day in terms of the lens that we look at things through, the risk assets, the markets, individual stocks. A lot to talk about.
Yeah, a lot going on. So this is the opening. This is Wednesday morning. We had the election last night. I think you guys all know what happened there. But this sort of volatility that we're seeing, Guy, and it's upward volatility in most things. Just to kind of set things up here, the S&P is up about 2%. The NASDAQ's up about 2%. The 10-year U.S. Treasury yield is up 20 basis points to 4.45%. That's the highest level since July. The U.S. dollar index, a massive move higher, up 2%. Bitcoin trading at new all-time highs, up 7%. We're going to get to some single names and some kind of sector stuff in a minute and try to kind of parse through some of the potential implications of this new administration. We also have a Fed meeting tomorrow where that pretty hotly anticipated 25 basis point cut. I think there's a 99% probability, Guy, when you're looking at the CME Fed Watch tool. But like you said, VIX is down 20%. So let's just kind of talk about the macro for a second here, because I think it's also important to note that the S&P and NASDAQ are also making new all-time highs here. So a whole sense of enthusiasm, if you will, for risk assets. And my question to you is, does it make sense, and is it likely to stick?
Okay, let's try to unravel this a little bit. Does it make sense? Yes, I think is the short answer. Is it likely to stick? I think that's where we have to start to sort of drill down a little bit. And I would answer that question no, for a myriad of different reasons. But let's look at these things one at a time. The first thing that I looked at today is obviously the bond market. Then I said, okay, what is the anticipation? What is the market starting to price in? So then I looked at the Russell through the lens of the IWM. As we're sitting here today, the Russell is making a new 52-week high, again, through the IWM, 236 and change. The prior all-time high was back in November of 2021, Dan. So 3 years ago when we got to about 240 or so. So what the Russell is saying is, there's a thought that small businesses and mostly the small and regional banks are going to benefit from less regulation. And I think the market is taking its cues from that. But don't underestimate the bond market. Now, the naysayer will say yields moving higher as a function of they're going to be more debt to finance, potentially higher inflation. I think the optimist is looking at the move in yields and saying it's the economy is going to reaccelerate to the upside, and that's why yields are going higher. So there's a lot to look at today, clearly, and I'm still trying to figure it out. But my biggest two takeaways on top of everything else is the Russell and the bond market.
Yeah, so small caps, regional banks, regional banks, less regulation, they should go higher. But your other point about small businesses in this environment, if the economy is about to inflect, they should do better. I just want to make one point about yields, treasury yields. So interestingly, at the end of 2021, mega cap tech stocks were absolutely raging. I think it was the beginning of multiple trillion-dollar market caps at the time. The Fed signaled that they were going to start raising interest rates, right, to battle inflation that they kind of missed in 21. And when you think about where Fed funds was, and you think about where the 10-year was, the 10-year was below 2%, Guy, at the time. I think it was like kind of 160 or something like that. So here we are on the 10-year at 446. Now, yields went up pretty dramatically in 22. The stock market sold off pretty significantly. I think at one point the NASDAQ was down 30-some%, and the S&P at the lows was down, I think, 27%. Some of the hardest hit stocks were some of the biggest mega cap tech. We know that Meta and NVIDIA and Tesla and Netflix all sold off about 70%. So here we are now with rates higher. You think they're going even higher no matter what the Fed does tomorrow. I guess the question is at some point, do these higher rates kind of weigh on these long duration assets? You and I will not know that, but that brings us kind of this next point in a way, is that let's look at the Mag7. Let's see how they're performing today, because, there's lots of cues that we can take from the last Trump administration, how they felt about mega cap tech. We know that Trump in particular was not happy with Mark Zuckerberg,
Hmm.
both in 16 and in 2020. I think there's a lot of, reporting that he thought that, Zuckerberg financed to kind of get out the vote in 2020, and then he lost. And we know that this guy holds grudges. The other one, it's interesting going the opposite way. When Trump started the trade war and putting tariffs on China, he excluded iPhones, excluded Apple products, which was actually a very good thing. So it's not just like a monolith how he might treat mega cap tech, but today Meta's down 2%, guy, and Apple's, up 1%. We also see, Google trading very well. Maybe the thought is they've kind of sat these last couple elections out, and we know the DOJ is all over them with a couple of cases. Maybe they kind of take the pedal off the metal. That being said, and I just want to, before I get your opinion, two of these big Justice Department cases, one against Meta and the other against Google, were initiated during the first Trump administration, right? So it's not exactly clear how the next one will take this. And the last point I'll just mention is that last week, when Vice President elect Vance was on the Joe Rogan podcast, he said he hates big tech. Okay, so and he actually has said in the last I don't know year or so that he actually liked Lena Khan, and she is the head of the FTC, and
Hmm.
she's been the one bringing a lot of these cases. So know a lot there, but like, give me your sense on big cap tech and how they fare.
Well, Lena Khan, I mean, that you're going to hear that name more and more often, I think, over the next couple of weeks. She's the FTC chair. I think, she's been in that role, I want to say, since 2021 or thereabouts. So I think the knee-jerk reaction is her days are numbered. And then but you start to unpeel the onion or sort of pull this thing back a little bit and say, you just mentioned what JD Vance said, and maybe she's the exact right person that this administration want in, because she's going to be hard on big tech. I think you're right to bring up Facebook. I mean, clearly the stock market is answering some questions today on the back of obviously a Dow Jones and an S&P making new all-time highs. You have an underperformance in Facebook, which makes sense. And I do think there's a bit of a bullseye there. But I think Google might actually wind up being the winner here, is in some, I don't know, perverse way. I understand what I just said doesn't sort of line up with that, but I think they're going to sort of, I think the bullseye is going to be off of Google, and the bullseye might find itself more in terms of a Facebook. And if you want to play a little bit of stock market here, I think the pairs trade for the next few months might be long Google, long Alphabet, and short Facebook, short Meta.
Yeah, that makes some sense. I think the most fascinating story in mega cap tech is clearly Tesla. The stock is up, nearly 15% as we're speaking right now. It's trading near 2-year highs. $300 is where it's topped out, guy. In 2023, we know it topped out just above $400 back in late 2021. And what's gone on here is that Elon Musk, CEO, got all in behind Trump. I think it's probably fairly safe to say that some of the stuff that he was doing with the ground game in Pennsylvania, the way he put, and this is clear, this is not just my opinion, put his thumb on the scales of Twitter, and he's 100% entitled to do that. He owns that company. It's a private social network. He really helped the administration. So when you think about a couple things, Musk and Tesla in particular, they need those EV credits to make the cars cheaper for consumers. He also wants tariffs on, Chinese imports of EVs. Okay. So in some ways, it's hard to tell whether that helps or hurts from a competitive standpoint. It makes his cars more competitive, but it depends what the Chinese end up doing, right? As far as tariffs, because we know that, yeah, they make a lot of cars in China. But this is Tesla, but who knows how this thing shakes out. Thoughts on the Tesla situation, because it's broader than that. It's broader than X or Twitter. It really brings you to SpaceX and Starlink, and that's probably the most difficult situation if you're thinking about this, as Musk is going to have a major, major seat at the table during the next administration.
Yep. And obviously, that's the next one you want to look at is Tesla. And let's just talk about what potentially could happen here. So, if Elon Musk were to have a role in this administration, and that's been talked about a number of times, and I think the volume's been ratcheted up in a meaningful way over the last month or so, what does that mean for his tenure at Tesla? Now, I think there's some that say, well, he can't do both, so he'd have to step away from Tesla. What does that mean for the stock? And something that I've said over the last week or so, and I'll reiterate on this show, is 5, 6, 7 years ago, I think Elon Musk leaving Tesla could have been catastrophic for the stock. I'm not certain that's the case now. Tesla might be a place in their sort of arc where new management, a new administration, if I may use the word, might actually benefit Tesla because maybe they'd be more focused and not as scattered in terms of some of the other things that he's been looking at. So I think in one way to look at it, aside from the obvious why it'd be beneficial for Tesla, it might be beneficial if Elon Musk were to leave. I know a lot of people might push back on that. In terms of the levels, if folks are interested, and we talked about this a number of times, you know, Tesla rallied to that 263 level, which was prior resistance over the last year, year and a half. And quite frankly, Dan, if you look, that stock traded from 265 all the way down to about 240 or so. So those levels held up. Now, obviously, with the news about the election, you have a stock that's sort of approaching this 290 level, making a 52-week high. So maybe it's reestablished a new range. But, I think somewhat counterintuitively, if Elon Musk were to leave Tesla, maybe the knee jerk is lower in the short term for the stock, but I actually think long term that might be a benefit.
Yeah, that's a pretty fascinating point because if you go and look at Apple, at the time that Steve Jobs, and obviously he had to leave for health reasons and he ended up passing. But when Tim Cook took over, I mean, this is when the stock really got supercharged. It wasn't long after that Buffett went all in. The company started a huge buyback. I want to say this is back in 2012. I know, Jobs passed in 2011, and it's been off to the races. Obviously, the stock has not been immune to sell-offs, whether it be broad market sell-offs or perceptions around their product cycles, and the like. So yeah, I could see Tesla really benefiting from somebody who's less controversial. Because the other point here is that the political discord is not likely to settle down anytime soon, right? And so there are a lot of other options for people to buy EVs right now. That wasn't the case, 5-10 years ago. So it will be interesting to see how that goes. All right, here's an area that I think is probably the most interesting of big tech because it doesn't have a lot to do with regulation, but it has a lot to do with supply chains. It has a lot to do with, access to probably one of the most important pieces of tech going forward for a very long time, and that's chips. So today, guy, let's start right here. Taiwan Semi, as you say, is one of the most important, maybe top 3 in the world, right? So they dominate the manufacturing of high-end GPUs, which obviously NVIDIA dominates. Okay, they are in Taiwan. We know the geopolitical situation there. So let's game this out for a second. The stock's down 2%. That's the knee jerk, right? So the idea, does President Xi kind of get emboldened? The Biden administration had said many a times that they were going to defend, Taiwan if there was any, aggressive, or if there was any aggression towards Taiwan. But, Trump is very transactional, and, I could see him, cutting some sort of deal with Xi that, hey, might benefit us. But by the same token, if there's any hiccup about production of high-end GPUs, because make no mistake about it, we are in now a tech war. We have been for a while with China, but the stakes have never been higher as it relates to generative AI, guy.
You talk about game theory. Let's talk this out real quick because I think you brought up the salient points. Obviously, the Biden administration, I think, was steadfast in the camp of Taiwan and the sovereignty of Taiwan. I'm not certain that's going to be the case under this second Trump administration. So, to your point, does it embolden the Chinese to continue their aggression? And I'm using that sort of with air quotes, but to ratchet things up a bit. And I think the short answer is yes. So the knee-jerk reaction in Taiwan Semi makes a lot of sense. But then you have to sort of play it out a little bit more. And this is not just me talking. I mean, this is the CEO of NVIDIA, I think 2 years or so ago, talked about the existential risk to their company was in fact hostilities in Taiwan. So I think you have to look at your NVIDIA position and say, okay, how does this play out? And what are the chances of something bad happening there? And is that a potential black swan for the chip trade? And I think the short answer is yes. I don't put it, north of 50%, but I think there's definitely somewhere between a 35 and 40% chance of something happening over the next few months into early next year. And I think the same is going to be true on the other side of not the other side of the globe, but in terms of what's going on with Russia and Ukraine, I think Ukraine is going to be forced to go to the negotiating table. I think something's clearly going to happen there. And then you have to ask yourself, does that embolden Russia, or does that put them back on the heels and the people go into their corners for a period of time? But That's what you have to be thinking about right now. But I think the China Taiwan situation didn't get any better over the last 24 hours. I think it actually might have gotten a little bit worse.
Yeah, so, bringing Ukraine into this is kinda interesting with Russia because do you remember when Russia first invaded Ukraine in early 2022? A lot of US multinationals pulled out of Russia. They set a very interesting precedent, right? So if China were to be the aggressor in some situation with Taiwan, what might happen for US, multinationals? And one of the reasons that this is so much more important, obviously, than what's going on in Ukraine, and not to minimize by any means the plight of the Ukrainian people and the aggression of Russia, but think about how much our companies rely on two things: manufacturing in China, but also access to their consumer. So I think we've talked to many strategists, economists. If there was some situation, some sort of blockade of Taiwan, and there was some hiccup as far as the ability for these chips to be manufactured there and shipped, there's no amount of reshoring that's been done. We know that Taiwan Semi set up a fab in Phoenix, and they just started producing some chips, I think. But these things take 5 years to come online, that sort of thing. So that would be a massive, massive disruption. All right, let's move to the CHIPS Act here, Guy, because this is something that Trump has said on many occasions he thinks is a horrible deal. And
Hmm.
and make no mistake about it, when he said deals that were negotiated by his predecessors in his first administration were horrible deals, he did everything in his power to unwind them. Obviously, the Iran deal, there was the Trans-Pacific thing in Asia, there was USMCA, there was a whole host of things. So if you think about who are the beneficiaries of this, Intel was one of them. But Intel's in an interesting situation because the stock is obviously washed out here. I think they got what, 8 billion or something like that, Guy, as far as earmarked. But there was also rumors maybe a month or so ago that Qualcomm might look to buy Intel. But Qualcomm actually, rather than declining to comment on the rumor, they said, we're not going to consider anything until after the election.
That's
So we
right.
just talked about regulation and how this could be a lot more favorable. And then the case that you might make is that Intel is really important company here for the future of kind of sovereign AI and the like, and manufacturing and everything like that. So talk to me a little bit about how you think the CHIPS Act plays out, and who do you think are the beneficiaries today, this morning, which is very different than, let's say, yesterday.
You hit the nail on the head. I think it's firmly the Intel trade is going to be fascinating over the next few months because, to your point, Qualcomm basically said we're going to wait and see what happens on the election front. Well, what's now has happened on the election front. And, I thought incorrectly, by the way, there have been a number of reasons to own Intel on the homeland security front. That didn't play out. But now, with the potential of M&A, and with the potential of sort of this reshoring thing that I think more and more people are going to start to talk about, I think Intel is a winner. It's up 4% as we're sitting here. And I'll be honest with you, I'm surprised it's not up double that. I mean, if you had told me again, the outcome would be as stark as it was and say, where's Intel? I thought the stock would be trading north of $26. And maybe it's just a matter of time before it gets there. But if you're looking for a trade, and by the way, this is not saying that Intel has figured out their business. If you look at the last quarter, it was not good at all. But just on a number of different metrics, non-market related, that work to Intel's favor, I think that's the trade you want to be looking at right now.
Yeah, and going back to tariffs, it was interesting. I read something, I think it was Ben Thompson in Stratechery this morning, and he was talking about, tariffs. Trump wanted to put tariffs on Taiwan Semiconductor. This is something that, if that were to happen and we were to get a trade war over chips, and again, this was with Taiwan, not China, this could be a huge problem, right? If you think about right now, NVIDIA is sitting in the catbird seat as far as pricing is concerned on their chips because there's really no competition. If you were to throw tariffs on there for US buyers of those chips, and they're already paying through the nose for those sorts of things, that could be an interesting thing. So again, we're just going to continue to monitor this sort of stuff and opine as it comes out over the next few weeks. Before we get to some M&A, we just talked obviously about a potentially big one, but maybe there's some stuff in the private markets. I got to hit this, Guy, because this is something that I think you and I have been talking about on Fast Money and on our pods, is that if we get into a different regulatory environment as it relates to M&A, Goldman and Morgan Stanley are really in a spot so unique among the banks. So here we are, we're 30 minutes into the trading day. Goldman Sachs is up nearly 11%. 11%. Morgan Stanley's up near 10%. These are the sort of moves in banks that you just do not see. I mean, right? I mean, especially from all-time highs. So let's talk about it. JP Morgan up nearly 10% also. I mean, so these are the top 3 investment banks. These are the 3 investment banks that would benefit most from an M&A, from an IPO cycle being reopened, that sort of thing. So give me the 411 on how you're thinking about banks, and would you be chasing these up here?
No, well, I wouldn't be chasing it here. I understand what the market's looking at, and I also think there's been this sense that regulation is going to sort of go away, and these banks are going to be once again sort of, I don't know, unburdened with the regulations we've seen. And once those sort of go away, they're going to have this unfettered access to things that they had in prior administrations, and that makes sense. So I think to a certain extent that's why the market is bidding these names up, and that's why they're putting a different valuation in terms of price to earnings and price to book. I get it. But at a certain point, regardless of what you think about regulation, these things become expensive. So, for example, I look at a Goldman Sachs now approaching $600, new all-time high. You mentioned JP Morgan. I mean, these stocks were relatively tame in terms of valuation just a year or so ago. They've gotten themselves very expensive. And but quite frankly, JP Morgan's on the top of that list. So I think the bank move today makes sense. I understand what the market is looking at, but I think at a certain point, valuation is going to matter. And I think people are going to take a long, hard look at it today.
Yeah, so let's talk about some M&A potential, some things that maybe kind of wake back up a little bit. Some of the things that were maybe rumored a couple years ago, maybe some of these COVID darlings, but also some of these names that have benefited from, just generative AI in the private markets. One of them is Perplexity. We've had the CEO, Arvind Srinivas, on the pod here. He's come on Fast Money a couple times. This is a company that kind of differentiates themselves from ChatGPT and Anthropic's Claude, that they actually use their models within their own application, which they call an answer engine, not a search engine. Very interesting company. I use it every day. They are raising money right now, supposedly per the information. We'll put the article in the show notes, near $9 billion. They're raising 500 million. 2 years ago, they raised, at a billion, or actually they raised at a half a billion, and then it was just skipping up. It was doubling, doubling, doubling. And I said to a friend who's a VC, and a very successful VC, after I saw this article, I said, you know what? They should sell themselves like almost immediately, not immediately, but, sometime very soon, for like $20 billion and just kind of walk away. Because the jury's still out on these sorts of models, whether they're going to be, a great use case, whether they're going to be able to be monetized. And this was yesterday at like 4:30, and he's like, yeah, but who could do it? And I kind of had to exclude all the Mag7, right? Because we know that they've had a lot of regulatory headwinds. So I threw out names like Adobe, Oracle, Salesforce, which don't seem that logical. But then if you think of like, Oracle's cloud business, this is something that would be an interesting bolt on and the like. So we went in 24 hours from none of them could buy something like this, right? To, okay, now anybody potentially could. Maybe not like a Meta that has a target on its back. And I guess the point here, if you think about it in a broader sense, is that what would this do to innovation if all the big guys start gobbling up all the
Right.
small ones, right? Like that's the way I would say, because obviously we are a hotbed of innovation as it relates to generative AI. And a lot of it has relied on immigration. And that's another issue. We're not going to get into that right now. If you think about that, Arvind, is first generation. He came over here 6 years ago, I think, to work at DeepMind, which was owned by Google. That's where he got his training, right? As far as, creating generative AI products. So there's a lot of stuff tied in here. Thoughts, Guy, on just this shift in 24 hours?
You make great points. And, does it stifle innovation, or does it sort of open the floodgates for innovation, understanding what kind of exit you could have within, 3 or 5 years? And I think, to your point, I think the jury is probably out on that. But, in terms of what could happen here, I think you're right to sort of throw out the obvious names and look at some of these sort of secondary and tertiary names. But, I'll throw another name in the mix. IBM has not been shy about acquisition. Remember the Red Hat deal where they seemingly paid through the nose, but it wound up being, I think, a life raft or life preserver for them. And that's what's reaccelerated their growth. That's not out of the realm of possibility for a company like that. So you're right to mention Oracle and Salesforce and Adobe. I'll throw IBM in the mix as well. I mean, something is clearly going to happen, but does it stifle innovation, or does it have a renewed sense of optimism around innovation? And I don't know the answer to that, because I think you can make a cogent argument either way. But I think the point you're making about the obvious five, I think they're out of the mix right now.
Yeah, it's interesting that you bring up the IBM. Again, it's not too different than my point about Oracle. With a Perplexity, for instance, it's a consumer-facing product, right? It would make no sense on the surface for an IBM or an Oracle to do that, except for the fact they want to take market share in this growing, public cloud space. And so to have a property like that, it would make a lot of sense. One thing I just wanted to hit before we get away from the banks and the IPO market, there's an article in the information. Again, we'll put this in the show notes this morning, and the article is Goldman, JP Morgan, Morgan Stanley eye crypto clients as IPO prospects brighten. So this is something that we haven't heard the idea of crypto IPOs since late 2021, early 2022. So the fact that that's coming back. So, Guy, talk to me a little bit because you and I mean, we've spent a lot of time on crypto since we started these podcasts. I want to say 4.5, nearly 5 years ago. And for all intents and purposes, almost every major use case that was being described in that last bull market has really fallen by the wayside. The only thing that's really stood the test of time is this idea of a store of value, right? And just go ahead and look at ETH. That was the promise, smart contracts and this whole, application layer being built on. Well, it's massively underperformed Bitcoin. Why? There's been no really interesting applications that have come from it. So when you think about the idea of everything we're seeing in the markets right now, all this YOLO and stuff and everything like that, idea that we're going to see a bunch of crypto IPOs, does that make you feel more bullish or less bullish?
Less, definitely less, but it's not out of the realm of possibility. And I think there are a lot of listen. I mean, Michael Saylor's probably at the top of the list. This is obviously a great day for him and MSTR. Oddly enough, by the way, it's not at an all-time high, the stock, but it's within a whisper of that. It's now a $50 billion company with Bitcoin either side of 74,000. I mean, at least today he's looking like a genius. But does it open the floodgates for this? I think, yeah, probably in the short term, yes. But this as well as I do. When those floodgates are open, you're going to get a lot of direct involved in that as well. And it's going to be not unlike, I think, what we saw with SPACs, a few years or so ago. So this falls under the category of beware what's going to happen over the next 6 to 9 months, because for every good company that comes out, there are probably 10 that are not.
Yeah, no doubt. I just want to make a couple quick observations before we get out of here. Just kind of looking at my main fact set screen. So Snap Guy is down like
Hmm.
6%.
Makes
Reddit's
sense.
down a little bit. So again, what is that saying? It's saying that X, which by the way, Twitter, Fidelity had marked down. There was a story out last week, 87%. Okay, so they
$14 billion, right?
yeah, so 8 down from 44 billion. So all of a sudden you start seeing a scenario where, X can be just unfettered in whatever they want to do. And Elon now, one of the reasons why when you think about why he bought it, he wanted to create this super app where payments and e-commerce, I mean, the list goes on and on and on, right? Well, let's say there was regulatory challenges to some of that. Well, they've all gone away for all intents and purposes, right? So, does that make sense that you would sell Snap because you see a resurgent sort of Twitter?
Makes sense to me if you're trying to figure out where the winners and losers are. Do you want to sit around and see, how things shake out for Snap, or do you want to sort of get ahead of the curve, understanding that at some point you'll probably buy it back cheaper? So the bets that the market's making in the very short term and everything that you've talked about for the last 25 minutes makes sense in the here and now. But the question I think you have to ask yourself is, can we take a step back and go to 30,000 feet and say, okay, is this going to last, or is this going to be a fleeting thing? I think for some of these, they're going to be fleeting. We talked about the banks. I think it's going to be somewhat fleeting. I think the bullseye on the back of semiconductors through the lens of what we talked about, that's going to start to magnify a little bit. I don't think the market is fully taking into consideration what can happen there. So I think there are going to be some winners that are yet to sort of identify themselves. And it's interesting on a day where, again, President Trump seems to have a former President Trump, President-elect Trump seems to have a mandate. You would think the defense stocks are trading better. They're not. So there are so many cross currents out there that some make sense, don't make sense, but I don't think necessarily any of them are going to be all that lasting.
All right, last thing, and maybe you could help sort this out for me. Baidu, Baba, Pinduoduo, the
Yeah.
K-Web in
Hmm.
general is down nearly 3%. Okay, so, let's just focus on Baba. This is a name that we've talked about a lot, right? And it felt like it, from a technical standpoint, from a sentiment standpoint, it was making a bearish to bullish reversal. It broke out at 90. This was when we saw a lot of that stimulus in September, right? That the stimulus by the Chinese, and it went nearly to 120 in a straight line over a few weeks. Well, it's since round tripped a bunch of that. It's at trading at $96. Again, we talked about the breakout at 90. Help me make some sense. Why would Chinese, e-commerce, consumer-facing e-commerce stocks be trading down on this result?
I think the thought is, and again, I don't know anything, but I think the thought is the new administration are going to be much more difficult in their negotiations with the Chinese. So, almost by definition, if China's playing from weakness, we're just going to start to, I think, take advantage of those weaknesses. And I think that's what the market's looking at. But the flip side of that coin is if you back them into a corner, what's going to happen? And I don't think the market has taken that leap yet. But I think what it speaks to is the weakness of China is going to be exposed by the new administration. That's going to hurt, obviously, their markets. That sort of makes sense. But when backed into a corner, what's going to happen? And I think that's going to be the next iteration of this trade. So again, there's a lot still has to play out, Dan. And we're talking. This market's been open for a half hour or so, so it's very early on. But you can start to see how people are making their bets.
All right, last one, BYD, which just overtook Tesla in
Hmm.
EV sales, okay, in China. So it's a local Chinese manufacturer, backed by Buffett, by the way, is down almost 6%. Rivian, which is obviously a domestic one, is down 7% here. Lucid is down a couple percent. Xpeng is down 5%. That's Chinese. NIO's Chinese, down 3%. So, and I mean, the clear thing here is that, Tesla is gonna run
Tesla
away with
wins, they
everything.
lose, right?
Yeah, yeah. So, just a lot of interesting knock-on effects. Every once in a while, I think regular viewers of Fast Money, listeners of On the Tape, they know every once in a while I call you Nostradamus, largely because on a day like today, you'll say, "Okay, I know it feels great. I know the markets are screaming. No one can see them acting any other way into the close, but give me your 411. Does this thing stick today?" Because, man, if it doesn't, from all-time highs in the major indices, with some of these names that are screaming, that could be, I think, a really seminal moment for this market rally over the last, call it, year and a half.
Yeah, and I'll put myself out on a bit of a limb. So, you had an S&P 500 that traded north of 5,900. That's an all-time high. But as we're sitting here right now, you have an S&P that's up about 100 handles. I think by the end of the day, you can give at least half of that back, if not more. So, a Dow that's up now 1,200 points, I think it probably sifts into maybe up 500 or so. And people say that's great. That price action wouldn't be particularly good, especially if you have some huge volume in some of those names. But the things to continue to watch, in my opinion, is the bond market. And I think regardless of what the broader market does, I think you're going to see yields continue to go higher. And I think the optimist is going to say yields are going higher because there's a sense that the economy is going to do better. I think the other side of that coin is yields are going higher because there's going to be more debt, and the debt service on these is going to be at levels where the market's not prepared for, which theoretically makes bond yields go higher. So I'm watching, obviously, a lot of different things. First and foremost, I'm watching to see how yields continue to trade today.
Yeah, if there's one thing that we learned from Trump's first administration is that there'll be a whole heck of a lot of uncertainty. It's not something that you can put, your finger on a kind of through line about how that administration will act towards a whole host of different things. And I think you're right on yields, Guy, because again, if you want to sell debt, what do you got to do? You got to pay, a higher or a higher yield for that, right? In a period of uncertainty, that would make more sense. So I'm with you on all that. All right, listen, I really appreciate you being here. That was a kind of interesting ride across a whole host of things in a very quick manner because everyone's trying to process this stuff very quickly. And I think a lot of these guesses that you and I are making right now, some are going to prove true, others are not. But again, stick with us here at OK Computer. We're going to try to break it down for you every week. Guy, I really appreciate you being here.
See you later, folks.